Goldman Sachs has recently added 5 stocks to its high-growth portfolio, a portfolio that is based on Sharpe ratio, or heavily based on Sharpe ratio, which is basically a measure of growth relative to adjusted risk. And starting us off at number 5 is Thermo Fisher Scientific, TMO. The WSX 1 year for TMO is 536.78, or a 9% increase. Analysts are saying it's going to hit 599.83, or a 21.8% increase this time next year. The risk for TMO is medium. The reward is high. We put this as a buy. It has a great valuation, good earnings growth potential. Most analysts are actually a strong buy on this stock, so even better than us. It does have strong cash flows, which is great, and the valuation indicates this stock was pretty oversold earlier this year, and now might be a good time to jump in. Number 4 on the list is PG&E Corp, PCG. The WSX for this stock is 1741, or a 15.4% upside. Analysts are saying 2042, or a 35.3% increase. The risk we put is low. The reward is high. We put PCG as a strong buy because it has an extremely low valuation. The stock is far down from its peak in late 2017. It has fair earnings estimates, especially given that low valuation. It does have high debt levels, but the TTM revenue is up and the TTM net income is holding. Most analysts are going to be a moderate buy on PCG as well. Number 3 on the list is Enphase Energy, ENPH. The WSX 1 year for this is 32.99, or a negative 16.8% decline. The analyst 1 year for this is 61.68, which is actually a positive 55.6% increase. Quite varied there. The risk is medium. The reward is medium. We put this one as a strong sell, but most analysts are going to disagree with us and put it as a hold. We found that it has a fair valuation and a fair earnings forecast. It does have higher debt levels as well, but the revenue and net income have been pretty stable. Pretty mixed results on this, so take that one as you will. Number 2 is Viatris, VTRS. The WSX 1 year for Viatris is at 10.14, or a 3.4% decline. Analysts are saying it's going to decline 2.9% to 10.2 next year. The risk we put as medium, the reward is low. That's going to make this a sell for us. It does have a nice low valuation. The stock price is still pretty far down from its peak in mid-2015. But the thing is that the short-term forecasts are calling for low growth, at least for the next year or two. And then after that, they're starting to call for high-term growth or high earnings growth after that term. Most analysts are going to be a hold on this, so I would seriously look into this stock as well if you're considering buying it. Number 1 on the list is going to be Moderna, MRNA. This is the number 1 stock that Goldman Sachs has added to their high growth portfolio, again using that Sharpe ratio, which is growth relative to adjusted risk. We found that our 1 year forecast is 27.05, or a 7.6% increase for this time next year. Analysts are saying 36.25, or a 44.2% increase. The risk is medium. The reward is high. We put Moderna as a buy. We found that it has a fair valuation and a strong EPS growth forecast. Those are really good signs. Most analysts, interestingly though, are a hold on MRNA right now. And those are going to be the top 5 stocks that Goldman Sachs have added to their high growth portfolio. If you want to see the top 3 stocks to buy that are under $10, go ahead and check out this video right here. Otherwise, thanks for watching and have a great night.